Welcome, everybody. How are you all doing? Glad to see you all here today. I am here with Brandi Bonds from Next Level Now, and we have a few people here with us already, and I'm sure we're going to have even more joining us over the next few minutes. Brandi, I'm so excited to see you. It's been a while.
I know. I'm so glad to be here. Thanks for having us. I'm really excited about today's topic, too.
Well, I am glad. I think today's topic is going to be exciting because um even for people who struggle with like I don't know, just like sitting down and looking at the books, today's topic is fun. We're talking like forward-looking stuff. And we're talking about how do we get more money in your pocket?
Yeah, hey, we all go into business, right? Because we like to say we're in business to help the industry, to help business owners, to help organizations, but really we go to work too so that we can enjoy the fruits of our labor. So that's why this is a fun one. It's a little more selfish.
Yeah. And you know what? It's okay to be a little selfish here and there.
Yeah.
Not too selfish, but a little selfish.
Yeah, 100%. Like over the years, one of the things that I've seen, Steve, is that business owners work really hard to grow their business. They throw nights, weekends, blood, sweat, and tears. You see the revenues grow up. You see the teams expand, the client's value increases, but sometimes the owners don't feel like they're getting the financial return that they expected. So that's why
Yeah,
I'm excited to really talk about that and how to fix that so that business owners can realize more in their pocket as they're going through their organization and growing it and figuring out what makes the most sense on how to grow.
that's awesome. So, before we dive in too far, I would love if you guys popped an answer into the chat for me. It's a real simple question. Uh, what would you do if you personally made 10% more a year?
Yeah, that's easy. That's a good one.
Yeah. And the best part is, it doesn't matter if you only pay yourself 60,000 a year, 600,000 a year, somewhere in between. 10% is 10%. I mean,
Yeah.
obviously, you know, as as your as your base gets larger, 10% does seem more exciting, but overall 10% shouldn't be like a life-changing amount for you regardless of where you are, in my opinion.
Right. Right. And really, 10%, it can be extra savings that you do towards your future. I think a
Yeah.
lot of MSP owners think only about the exit, right?
Uh-huh.
And planning for the exit. And this is a way for you to take that extra 10%, as you're saying, and put it into a savings account and another savings stream to save for your retirement as well. So you're not banking all on the big event. You're doing it incrementally, little at a time.
So what I'm hearing is if you made an extra 10%, your recommendation is not how many new Apple products can I buy?
Not if you're only trying to get an extra 10%. No, it would be they say, right? Save a minimum of 10%. And I would argue if you're a business owner, you should be saving a little bit more than that, as well as treating yourself to reward yourself for the hard work you're doing so you can enjoy your work more. Work hard, play hard.
Maybe that's the problem. Maybe some people don't treat themselves enough and other people treat themselves too much. We got to Goldilocks this thing.
Yep. And really this session's going to be more about how to get more from the revenue your business already has by not adding new services or new tools or more complexity. It's about simplifying and really understand what's going on. So getting that
Okay.
10% should be relatively easy.
I like the sound of that. Well, I am going to put your slide deck up for everyone to enjoy. Guys, you didn't tell me in the chat. What are you going to do with that 10%? I'm dying to know. Who's going to Tahiti? Who's putting it in a Roth IRA? I mean,
Yeah,
question demands answers.
yeah. And I definitely would like this to be interactive, guys. So if any questions come up anytime, interrupt in the middle. Steve, I'm going to ask that you monitor that just because
Absolutely.
I won't be. And that way we can really address any of the questions that people have in real time. Feel free to ask away.
So so one guy said, retirement savings. That's a very logical and smart, intelligent answer. Another person said they'll do it towards their kids' tuition. Very selfless, again, logical, intelligent solution. And then the third guy, I think he's just, I don't know, pandering to a particular audience. He
I
said
know, Riley. He
he's
wants to work with us, and we're not working together yet. I'm ready too, Riley. Get that extra 10%.
there you go. All right. Well, I think it's been long enough. Brandy, why don't you dive in? And I just want to clarify, guys,
Right.
this really is like going to be highly educational. All right. So stick around to the end because you're going to learn some really cool stuff that does not require you to sign up for either of our services. And
Yeah,
holy
no.
green, I just realized what I look like in front of my
You
St.
look great.
Patrick's Day themed background.
Yeah, you look great. So, what many MSP owners experience is exactly what this slide represents, right? Revenue growth. Everybody thinks about adding revenue. They're the owner isn't necessarily seeing the financial benefit. I've heard many a times I'm in growth mode, right? And when in growth mode, one of two things happen. Your revenue grows faster and your EBITDA actually either stays the same as a percentage of revenue or dips down a little bit, depending on the modeling that you have. But there is a gap between the increasing revenue and the owner income, and it becomes larger than anticipated because as you scale and grow, it gets harder to manage your operation, right? So what we want to do is make sure that the business owners not only work harder by managing more people and taking on more responsibility, but their income increases as the business increases because guys, I'm a business owner over here and I know the sleepless nights. I know what it's like to worry about, did I remember this, or this? And you want to make sure that if you're going to take on this growth, that you're doing it with the reward in mind, not only for all of your people, but for yourself as well. So when we start looking at the financials together, we also often see this gap between the revenue and the owner's equity. And it's really found in somewhere in the structure in the business. It could be pricing, it could be the way you're allocating labor, it could be the mix of services that your businesses are selling. And for example, we had one business that I looked at yesterday where their the bulk of their revenue was in products and software, which has a really tight margin. So really focusing on the labor, not as a percentage of revenue, but on labor generating revenue is most important, right? Because product and software is a resale. It's not something that you need necessarily more than a person or so to deliver. So you have to start looking at your numbers from a CFO perspective to see where that gap lives. And really, that's what we're going to talk about today. The top 3 gaps that we look at and how to increase your income. So owner's wealth is built by closing the gap between business generated revenue and owner retained profit. And it's not by maximizing MRR. That is a very common misperception that we see a lot. And in other words, most
Mhm.
successful MSP owners focus on closing the gap between what the business earns and what the owner actually keeps. right? And you want to, it can be influenced, like I said, by many different factors: pricing, service mix, labor structure, tax strategy, and how the owner is compensated. So a lot of what I see is I have owners that say, what should my comp model look like? And most don't realize you can have a variable comp model for owners as well. So as the
Sure.
business thrives, so can the owner. And that changes the dynamic of how owners think. So that is what we want to shift some mindset here on what that looks like. So today we're going to look at profit clarity by service line, federal tax changes for MSP owners, and owner compensation. And then what are some financial recovery opportunities that can be out there? So, different ways of looking at your business on how to put more money in your pocket.
All
And don't
right.
forget, guys, ask questions if you have them, if they come up.
For sure.
So, I want to start with a story today because I do think it's relevant and gets you in the mindset of why this topic came up. So, a few years ago, I had an MSP owner that came and they were just crossed that $4 million mark, and
Mhm.
which there's inflection points in businesses, and that 3.5 to 5 million is an inflection point for an MSP. And it's when you work so hard to get to it and you're like, yes, I got it. So as we were talking, as he crossed that big milestone, he didn't sound very excited about it, and he sounded really exhausted. He sounded that he was defeated by this growth. And he said something that struck with me, and this is the quote, right? "I just don't understand. The business is growing, but it doesn't feel like I'm personally getting ahead."
That's a
And
bummer.
I hear that, some version of that all the time. I'm really tired. I need help. I can't run it. I'm doing everything. Like there's all these different versions of that, right? So the first
Man,
thing I asked him was for his P&L. And when we started reviewing it together, everything looked really healthy at first glance, right? The revenue was growing, the team had expanded, clients were coming in, but then when we started looking at the different profit lines, that's when the picture changed. 25% of his revenue was coming from hardware and project work. And when we looked further into it, the time involved, procurement, coordination, engineering, and the margins were really thin. Meanwhile, his managed service agreements were very profitable, but they were a smaller portion of the business. So while the business was growing, it wasn't growing in the right segments in order to lend to profitability, and it was draining him and his team. So once we saw that clarity, the strategy changed for the business. And instead of chasing more project work and hardware deals, we focused on expanding managed services and a type of managed services in his company's sweet spot, right? Because every company has a sweet spot in which they can deliver the right level of service for the right amount of money per month, and what that customer, that perfect customer look like. And we were able to target it and drive it, and his profit improved significantly. It took about a year, but then he was able to add that profit clarity to build his owner wealth. So
that's pretty
that
cool.
was pretty cool, right? Because revenue is vanity, guys, right? Profit
Yeah.
makes you sane, but owner income is how you feel it, right? When you
Mhm.
can go on that vacation or add to your retirement account, that is what gives you the greatest sense of relief instead of just being busy. I don't know about you. I don't want to grow my business just to be busy. I'm busy
Right.
enough.
100%, 100%. So with that, I'm genuinely curious. Have any of you guys felt that? The business is growing, but I don't feel like I'm getting ahead, or I don't feel like my wallet's growing. You know, that
Yeah.
that's a problem, right? I mean, And I know that uh, as a former MSP myself, I often had that shiny object syndrome, right? You know, I was, oh, if I just sign up for this tool, it'll magically make everything better for me, right? Well, I mean, guys, if you have shiny object syndrome for your MSP, are you also experiencing that for your own personal uh
Yeah.
budget? You know, are you,
Yeah.
oh, if I just signed up for DoorDash, I wouldn't have to go to McDonald's. They would deliver it to me,
Yeah.
but I mean, obviously there's a subscription service for everything. So
Yeah.
sometimes you just gotta, I don't know, look around and cut the fat out.
Well, and there is a way, right? Like if you're looking at this chart here and just looking at how it's growing, there is a way to make sure that as your business is growing through a variable comp and you can build it out. And Sleek has a great comp model that we follow a lot, which is
Mm.
part of service leadership. And when you're growing, build in an accrual for bonuses and not only for you, but for your team. And if you do it for your team, do it for you, right? And if
Ah,
you're all on the same page and if you're drinking the same Kool-Aid that you're putting out to your team, you're in a win-win situation. So as your company grows, your income should be growing with it and not allowing the dips to go down, right? But it
yeah.
does require discipline and it does require modeling, right? You can't
Mm.
just do it, right? You got to make sure you have cash flow.
It's the discipline part that's difficult, Brandy.
It, it is the hardest. And that's when you use your finance people, right, to hold you accountable. And
Mhm.
one quick tip on the discipline, as you're doing this and if you load in an accrual of a bonus or a variable comp, you can look at your P&L in the future and say, okay, what does my revenue need to look like? If this accrual hits, what does my profit look like to make sure that you have that? But look a couple of months out. Always look at least 2 months out so you know what it needs to look like in order for you to realize what you're going to be seeing. Don't just look at the past month. Have that at least 2 months out because if you have a recurring revenue model, you know what your revenue is going to look like at next month and the month after. And if you add an employee, make sure you add that in and then you know where you're driving to. It's like looking at the Waze map, right? You know where you're going. You never are looking at your Waze map when you're driving to where you've been. That doesn't matter to you. Use that type of discipline, if that makes sense. Okay. So
Mm.
we talked about this a lot. And one big thing is when you can see the profitability by revenue stream, which I would assume most people, not all, but you want to have segments of your P&L that show your revenue by product stream and your cost of goods sold by product stream. And make sure you're adding a labor allocation in there so you know by segment how much is labor, how much is product. Have that broken out and track your margins. The best way to predict the future is by looking at what's happened in the past and really track it and know which type of revenue is bringing in the most profit to your organization. And if it's not bringing in enough, try to understand why and either change your pricing strategy or make the decision not to be busy in that area. How many people get scared turning away revenue, right?
I mean, I did all the
Everyone,
time. I was terrified.
everyone.
Yeah. But that doesn't, I mean, that doesn't compute. Like, no, this guy wants to give me money. I like money. Please, can I have your money?
You only want to take money, guys, when the money nets you a profit for your employees and for yourself. You don't want to take in revenue that's going to cost you more to deliver the service or not net anything. That's called busy work. Unless you're doing it intentionally because it's your volunteer project, right?
Yeah.
Or you're trying to gain credibility because that happens sometimes. That does
Yeah, but
happen sometimes.
I remember, when I ran my MSP, one of the things I also did was, websites, and you know how many times somebody reached out to me and said they can't really pay me a whole lot, but it'll get me a ton of visibility.
Yeah. And
That's
and that
that's what that credibility thing feels like, and it just feels like twisting the knife a little bit.
it does. It's the one way that we recommend that is if you're moving into a vertical and you need to get some feathers under your hat, if you will, that's when you would do that, right? If it's a good stakeholder or you really need to dial in into an industry and you need to gain some credibility, okay, you can let the margin suffer. But if you're not going to use that to get your flywheel going in that industry, don't take it. And that again, discipline and commitment, right? But
Mhm.
other than that, don't take work to be busy. That creates stress, and you don't want to use growing revenue to mask some of the structural issues that you have in your business model. You want to simplify your business model and understand clearly what you can deliver well, and make the maximum profit.
Okay.
And then we've already talked about this, but this is the simplest way, right, to be able to explain this, right? And really having them all grow together makes the business feel good, right? If
Yeah.
your company is growing and your profit is growing and your income is staying the same, that doesn't feel good, right? Unless you're in business to create jobs for people and it's part of your core mission, okay, right? You have enough. But that's not what this webinar is about. This webinar is about adding to your owner income. And as your business grows, even if you throw yourself a bone that says, okay, I have added $100,000 of MRR, I'm going to give myself a $5,000 bonus. Think about that. It's not a ton of money, right? How many people would feel really bad about getting a $5,000 bonus? Or is that a
Oh,
vacation?
that sounds unfortunate. Ugh.
So you want to be able to focus on building a structure where revenue consistently turns into profit and profit turns consistently into owner income. And it doesn't need to be a lot, guys, but it is psychological and mental, and you want to be able to maximize that. And that's the lens that we want to be able to focus in on and understand the different service lines. Okay? So, profit by service line is really just understanding your different service lines, because revenue doesn't tell the story, nor does just EBITDA, right? A business can look solid on those two things, but you want to know where your leakage is and how you can turn it up a notch. Okay. And then here's the typical revenue streams: security, cloud resale, hardware. One of the biggest mistakes I see on segmentation, guys, is mixing hardware with cloud resale or software resale. Split it out. You want to see that differently so that you can see your margins for like items. Okay.
Mhm.
The other areas that I see a lot, and it's coming more and more, AI is a different segment, as well as VCIO services. Separate that out. Your VCIO services is a high value add service, and you want to make sure you're maximizing it. And you want to make sure that you're paying your VCIO appropriately, right? Are they doing
Yeah.
the work that they need to? So really break these out. Projects are typically one time. They're usually implementation, upgrades, installations. They're a good way to augment. They're not as predictable unless you're bringing on new clients. When you have a good project, guys, that should be about 45 to 55% margin. Okay. Managed services, 50 to 65%. Hardware, um, well, it depends on what they're buying, but I'll go 10 to 25%. And I am seeing an uptick in that because of the type of hardware. Cloud
Oh,
resale. Yeah, go.
especially when you tell them, "Oh, I mean, and I don't know if you know this, but tariffs. I mean, tariffs have doubled the price of this computer, and RAM is so expensive. On the GPU, I mean, you can't even find good GPUs anymore with all this AI stuff." And,
Yep.
so I wouldn't say lie. Maybe it's not. I'm kidding, guys. Don't do any of that, all right? But
We're not going to advocate for that, Steve.
I'm not a I'm no, I've got jokes. But seriously, you need to consider the fact that prices for these products are probably going up, especially if we're talking about
Yeah.
computers.
Yeah.
RAM prices have what, like doubled in a couple years. GPUs are like astronomically expensive. Thankfully, not too many businesses need a GPU, but
Yeah.
if you're working with people that are doing like AutoCAD and like architectural drafting, or maybe they're doing 3D designs, or that kind of stuff, like those people are all going to need GPUs unless they're running software that does everything off the CPU, which would be really unfortunate.
Yeah.
Um, so yeah, I mean, just equipment in general, it's all becoming more expensive, and unfortunately, that means for you to continue making that level of margin markup, however you want to look at it in your brain, like you got to make it even more expensive for the customer. Just because it's more expensive for you doesn't mean your customer needs to get a discount.
Well, you got a price too in your hardware, the price of sourcing and procurement. And people forget that there are labor that is
Yeah,
associated with procuring hardware. How many times do you have to track it, follow up on it, negotiate? Like that all has a price to it. So
exactly.
one thing, most MSPs do segment out their revenue pretty well now, and they know that. So, as a CEO, I just want to give you some questions that you should start asking, right? Your finance team. Don't ask questions like, how do we grow revenue? Ask questions like, which services are producing the best margin?
Mm.
Which services consume the most engineering time, right? Where is pricing misaligned with labor? And when you shift your thinking that way, it's super powerful, right? Because now you're not looking at a revenue problem. You're looking at a revenue mix or an operational service delivery issue and that you can shift a little bit. And that's where the power comes, because that's where you want to get to. And then you can start to track it a little bit more, right?
Yeah.
Revenue growth does not mean profit growth, as you can see, right? You can grow hardware and reduce margin. We've said that a thousand times, but what you want to be tracking is, okay, what is the impact on my labor intensity, which is projects? Unless you have a dedicated project team, projects can be the number one derailer of your team, right? So you got to plan it out accordingly. Keep the labor intensity as stable as you can make it, and make sure that it stays profitable so that you don't lose. You don't have to hire a lot of people to deliver those projects, right? You can let it use as a filler with your current staff. And that's what you really want to be able to focus on. And then just another, and looking at it like this. how much of my business is made up by different segments. And when you look at it by demographic, by type, by industry, and really start to hone down where you're making the most money, that's where the power comes. But it's hard. It's not easy, but you do want to be able to really look at it to know where you're making the most money. That is the easiest way right out of the gate to get to your 10%, guys. Easiest way. Know where you're making money, know where you're not, and change the way you're selling it, right?
Hmm,
Number
okay.
2, federal tax changes, right? That you should understand. Bonus depreciation, entity structure, salary versus distribution balance. There's a lot of different ways to work with your CPA. Use your outsourced CFO as well as your CPAs. They should work together. And there's a lot of ways to know if you're being taxed too much come the end of the year. How should I spend my money? How should I keep it? Where should I put it? When should I take it? The IRS does expect a balance between salary and owner takes and the distributions that they receive. So you want to make sure that you have a proper comp structure in place that matches with the business, and it should be revisited as the business grows. And from a CFO perspective, this conversation isn't about an aggressive tax strategy. It's about making sure that the structure of your business still aligns with the scale of your business, right? As the business grows, there are ways to change your business. And I'm not going to get into all those details. Happy to share. I am not the best tax person. I am a CFO in recovery now, I like to say. Um, but there are some amazing tax experts out there that we work with that help work with the CFO to say, okay, what's going on in the business? How should we structure this? How can we get more tax efficient to allow money to go back to the owner versus paying it to Uncle Sam, which is, I think, all businesses should look at, right? So some of the key areas are bonus depreciation, equipment deductions, R&D tax credit is not on here, but we're all now in the realm of if anyone's not looking at AI, right, and putting together a program for AI, that's R&D. Entity structure, what type of structure should you be for your current revenue and profit to maximize your tax? And then salary versus distribution balance. These are all little ways that I can tell you one client I worked with, come the end of the year, he had a profit. I want to say it was going to be about $450,000. We invested in infrastructure so that he could get the bonus depreciation. We gave him a bonus because he had earned it and he had made so much money. We added benefits to his employees that they didn't have before because the business was running well, and we changed the health insurance benefits so it further helped his employees and him in that. And it reduced his tax down to, I want to say he had a taxable down from 450 down to 150 by just doing a few little tweaks, and that feels good, right? He still
Yeah.
had his gap books, but he was able to put some more money in his pocket.
So, before we keep moving forward,
Yeah.
um, everything Brandy's covering today is about, you know, closing the gap between what your MSP generates and what you and your team get to keep. Um, a big part of that gap, I mean, I don't know, Brandy, you tell me. I would say it lives in how the money moves through the business, right?
Yeah. Yeah, that is.
So, yeah, so that's what we do at Alternative Payments is we help the money move through the business. I want to take just a couple minutes to talk about alternative payments. Brandy
Great.
still has content that she wants to go through, including I'm going to ask her some questions. Brandy, my session with Wim went so well on Tuesday. I'm analog. I've got notes. So, uh, yeah. So I've got questions I want to ask you about a couple of things. Knowing that you are not a tax person, but as a CFO, you understand enough to be dangerous about taxes, right? So,
Yes.
um, let's take a few minutes and we'll come right back to all of the awesome education. All right.
Yep.
Um, all right. So, with that said, alternative payments was built specifically for MSPs. The problem that we're solving is consistent. Uh, MSPs want to get paid, right? It's still too manual, it's too slow, it's too easy for clients to ignore.
Yep.
Well, the nice thing is we give your clients a branded portal where they can see every invoice, pay by ACH or credit card, set up auto pay, and you stop chasing them. From your client side, it's a professional experience. From yours, you're not sending the same invoice twice.
Yep.
Now, on the back end, we sync two ways with your PSA, with your accounting software. Invoices will get created, it flows in automatically. We'll send out any reminders. The client will pay, it gets marked as paid. We even create the deposit in QuickBooks, log any fees, so that way when you download your bank feed, it just matches and everything reconciles. The whole AR workflow without anyone touching it manually. All right. So most customers, not all, but most, get back about 80% of the time that they were spending or wasting, depending on how you want to look at it, doing manual accounts receivable work. Our onboarding team can migrate all of your existing client payment data without breaking PCI DSS compliance. So you nor your clients need to rekey all the account information, which sounds like a win to me.
It
Uh,
is.
so, so if you're curious how other MSPs are automating accounts receivable without adding headcount, let us show you. I'm launching a poll. If you guys could be so kind, it's one question, multiple choice. I mean, you could get the
Yeah.
wrong answer, but I'm not gonna tell you what the right one is. So that's it. Brandy, while they do that,
Yeah.
would you like to tell us what you and your team at Next Level Now actually do for MSPs?
Yeah. So we provide fractional CFO services and accounting with technology support. So we do accounting from controller, bookkeeping, all of get the books in order. We optimize alternative payments and accounting systems and Halo and ConnectWise, as well as provide that higher level CFO services to help move businesses forward and transform to the organization that they want to be, right? So I love alternative payments. We actually just recommended that for one of our customers, just went live in December, and it has been a game change for that client and getting their money faster without having to go through the AR collections, because a lot of what happens is invoices get sent, they get eaten by the email monster, as I like to say, right? And then it gets forgotten. Now, what we've seen with this client, just as a case, we've been able to improve their cash flow by using alternative payments because we're collecting money before we have to pay our AP, which is the
Uh,
biggest key, right? So that little shift improves cash flow. And that's one of the things that we do is we look at what are the pain points in the business, what keeps the owner up at night, and then we put in solutions to solve that by becoming an embedded back office finance team.
that's incredible.
Love it. Love what we do.
Same. All right. Well, I'm going to do the same thing for next level now. If you are interested in a conversation with Brandy or someone on our team to see how they can help your MSP, please, let them know in the poll. Riley, we already know your answer.
We like Riley.
That's great. I like Riley too. Riley shows up a lot.
Yeah. It's
All
all about
right.
learning, all about learning.
Yeah. All right. So while they answer that, I'll leave that up and running. So I promised I had some questions.
Okay.
So, um, how much do you know about R&D tax credits? Enough to be dangerous?
Enough to be dangerous. And I know it's super important for you to do because the benefits are real. And if you are developing a product or a service that you want to sell and you don't know if it's viable, record all the time and expense into that because you can
Uh,
get a discount on your tax burden. It's huge. So even companies like Next Level, we do submit to the R&D tax credit just for formulating. We have a new technology team that we put in place this past year. So thinking through that concept, what's it going to look like, getting the certification so that we could deliver that service, things of that nature, or developing AI is a big one. I don't know about you guys, but when you are working through your AI solution or a VCIO solution, record it. Record
mhm,
the time that it takes because those things matter. Because if you're not
100%.
selling it and you're trying to test viability and what it would look like, that's research and development. And that's part of the R&D tax credit.
And I want to throw this out there. Some of you may have heard of the One Big Beautiful Bill Act, or as some might say, the One Big Beautiful Bill.
Yeah.
Here, let me put this back. Oh, that just didn't feel right. So so signed last year, July 2025. It created Section 174A, restoring immediate expensing of domestic R&D costs. So you can amend your returns back to 2022, and there's a deadline of July 4th, 2026, which is what, that's under 4 months away. I'll
Yeah.
be honest, this is all AI generated, okay? So, is it accurate? No idea. You should talk to your
CPA.
CPA and see if you have anything that should be amended or whatever on your taxes thanks to that big beautiful bill.
Yeah.
Um R&D is not just for tech companies though. Like it's not just
No,
for it's not just for, Tesla for their new robots or like
no,
it's not that. It's legit. You can, like she said, you can see if building your own AI chatbot is a viable thing, or seeing if you are able to just become the local expert in Claude or uh uh why can't I
yeah,
think of the Microsoft one?
Copilot.
Thank you.
You're
We're
welcome.
Microsoft shop. Yeah. So maybe you become the local expert, right? Well, I mean, you gotta figure it out. You gotta do some research and then you have to develop the service that you're going to offer, right? I mean, these are all I don't think again, talk to your CPA, right? But
Yeah,
I'm not telling you to do anything untoward. I'm not suggesting that you buy a new Nintendo Switch 2 and say you're just trying to see how serviceable they are and if you can install an MDM on a Switch 2. Oh shucks, I can't. And it's outside of the return window. I guess I got to keep it. Like that isn't a great idea. But the other stuff, great ideas.
yes, I
What
agree.
about what about like S-Corp owner compensation type stuff?
Yeah, and that's our next section, right? Like when you're looking at being an S corp and owner compensation, there are three ways that owners get paid, right? And the first is salary. If you're an S corp, pay yourself, right? Pay yourself a reasonable salary. And then the second is profit distributions, that a portion of the company's profits that flow to the owner after expenses and reinvestments. I recommend, typically, like, ballpark, I get asked this a lot, 50% give back to you, right? So whatever your profit is, half goes to the owners. And then third is enterprise value. And this is your long-term wealth creation. So you don't want to take so much out of the business that you dilute that enterprise value, because that is how you're gonna build that real the real wealth for your compensation. So the one question that I ask owners a lot is, if the business was structured optimally, what should you be taking home? And the answer sometimes is the owner is underpaying themselves relative to the profitability of the company. Sometimes they're overpaying themselves, right? We see it both ways. And really it should be more level set, and make sure that you are paying yourself regular compensation for what you are doing, and it is taxed at ordinary income, especially as an S corp. You want that. Don't have it only be distribution, because you want that taxed as ordinary income. And then your share of the profits that is set back after, and that is based on um, business performance, right? So your profit distribution should be based on the performance of the business. Your
Mhm.
salary is based on the job you do within the business. And then the enterprise value is the total business worth realized upon investment or sale or transaction. And that is what most people forget about, that last side, right? They focus on the salary and the profit distribution and forget about that enterprise value. And that you really want to make sure that you're setting that up well, have it aligned, and make sure that the owners understand how it factors in. But you want to plan for that enterprise value as well. And you do that through different entity types, depending on when you're looking to make that exit.
And did I may have missed it because, there's a lot of big words here, right? So, what's the difference between paying yourself a distribution and giving yourself a bonus?
So a distribution usually doesn't get taxed, and a bonus typically does, because
Oh,
it adds as normal compensation. So if you have a variable
well, I
compensation
think I
plan,
heard about 30%.
yeah, yeah. So if you're running a variable comp model for your people, you're gonna want to put yourself on that same variable comp plan. One of the things that most owners forget is to lead by example and be in it with your people, right?
Mhm.
Because you do want to have that camaraderie and be paying yourself just as you would them, and it normalizes your business. So if you are going to sell your business at some point, you want to make sure that you are not over or underpaying yourself, and normalizing that data. And distributions go right to the balance sheet, where bonuses go to the P&L. So that's the
Okay.
other difference. One if
That's,
one
cool.
reduces tax burden, one does not.
Hmm.
Okay.
Well, and then when you say one reduces tax burden, one does not, is are we talking about the tax burden for the person or for the business?
Depends on the type of entity. S corps are typically pass through.
Uh-huh.
So that goes to the person directly on profitability, and that's whatever the profit is. There's caveats to that, right? But it's a good rule of thumb. Whatever that profit is flows through to the personal tax return, where if you're doing a distribution never comes out of that number. It goes straight to the balance sheet. and you are taxed on it differently, but it depends on what your basis is. So it's a more complicated question than that, and it depends on the cash in the business, but you are taxed as an S corp on whatever the profit is of your business, and you can take that money out. So it ebbs and flows through your retained earnings.
Hmm,
There's a lot of accounting speak in that one sentence, which I understand. But
it's
it is.
okay.
It's based on your retained earnings, Steve. So, I mean, you wanna do it, always, right? Because when you make money in your business, you're taxed on the profit. You wanna distribute that profit to you because you're already paid the tax on it. But you can't deplete your business of all the cash. So that's the balance too.
I mean, that sounds like bullcrap. It's my company. I do what I want.
Yeah, until you have payroll and you have to put the money back in.
Oh, I guess there's that. So, do you see a lot of owners setting their salary once and then like never looking at it again?
Um, yes, but we do adjust it so the best way to look at that from a salary perspective is to look at your CEOs just as you do the compensation for the CEO, just as you do everyone else in the company. I recommend at least an annual review of the looking at the market trends. What is the market actually paying for each of the jobs of your organization and adjusting accordingly. Sometimes market value will go down for some jobs, right? Because of AI, for example. If you're using alternative payments, the AR function may have a lower salary to it than what it used to have.
It just
But
means one person can do more.
I agree. But the skill set changes too. So one could
Mhm.
argue an old school AR position would not fit to a new AR position.
Sure.
So the skill set could be actually higher. So the salary could be a little higher. So when you do
Mhm.
that annual comp review, you're never going to lower someone's salary, especially if they're doing good work. You may shift their job a little bit, but you want to do that for the CEO as well and your whole leadership team to make sure you're paying people appropriately. And that actually goes a long way with your people.
I
So
like
don't
that.
just set it and leave it.
Set it and forget it. So
No.
you mentioned you mentioned like enterprise value
Yeah.
toward the beginning.
Yeah. So the
Do we have?
enterprise value is the amount that your company is worth in a transaction, and there are about 26 different points that you can look at in order to um drive value. There's a the first is just look at your customer contracts, for example. I'll start there. If you improve the value of your contracts and realize, say, um, you should have an auto increase built into your contracts of 5%, say. Doing that every year, that 5% goes right to your bottom line, and that makes it easier for organizations to improve their profitability. But that 5% of revenue, if you do that and go straight to the bottom line, that extra 5% improves your profitability, which increases your, let's just say it's $100,000, okay, on a $2 million company. That $100,000 improves by a multiple. And the multiple could be 6, 7%. So that $100,000 actually is 600 or $700,000 in enterprise value, right?
Mm.
So in all of these little tweaks that we can do by increasing that enterprise value, it improves your multiple that you can get in a transaction or a sale. And that's what we're talking about because for owners, running your business, not just to prevent paying taxes, but to maximize, that's where we talk about salary, We talk about taking your distributions as well as preserving that enterprise value and not depleting all the profits out of the business. Making sure you manage all three of them, that gives you that value, gives you your end game that you're all in business for. People aren't in business just to run it. I don't usually see, I have one client that just wants to run their business out until they can't do it anymore. They don't want to sell. They have no one they want to give it to. They just want to run it out and let it die with them. I don't see that very often, right? So at the end of your term, when you're done and you're figuring out when you want to retire, that's when you can cash out, but you want to make sure that you know you get the maximum or know what your range is. And that's that enterprise value.
Is that client old enough that they should be retiring?
60.
So
Yeah.
I
And
have
they've
so
just
many
taken the
questions.
money out of the business every year. So that's our strategy. How can we, that if the enterprise value doesn't matter, how can we maximize their income year over year so they can invest? And that's what we're working on.
So what about the clients? Like, does he have a plan for them for when he and the business have the
Yeah.
unplanned conclusion?
No. As of now, no. I'm trying to transition him a little bit. It's hard, right?
Yikes.
When people, because it overwhelms people sometimes
Yeah.
when you think about enterprise value and selling and what if my business isn't worth enough? Does it mean my life's work isn't enough? Well, if you can get anything for your customers, it's worth something.
Right. Well,
Yeah.
not only
I'm
that,
I'm
but
with you.
I mean, it's not even like, sure, sell the business, get some value out of it, right? But I'm even looking at this from like the customers need their own business continuity.
Yeah. Yeah, there'll be
Like,
enough notice built in. I'm
okay,
trying to get that mindset shifted, but it's hard, right? Cuz it's not everybody has their own realizations that they want to realize or not, and we just want to be along with them to make sure that we can help with it, and that's just the reality. So quickly before we run out of time, Steve, I
yeah,
just want to share these are the areas too for financial recovery opportunities. If you engage in any of these guys, you will get 3 to 8% like that, right? Look at your vendor cost creep, unprofitable projects, labor allocation inefficiencies, misprice agreement, service bundle issues. Any of these items, you can improve your profitability by tackling them one at a time. And the typical recovery is 3 to 8% per activity.
per activity.
If you find things wrong in them, yeah. Yeah, so
So
you
I mean,
wanna be really look at them.
we're talking literally. You've got 5 activities here, on average,
Yeah,
typically.
let's just use 3%,
MS
right?
MSPs
15%.
could MSPs could recover 15 to 40% if they did all
You
5
won't
of these
see
things.
40, you won't see the 40, right? Because it
Okay.
unless they'd be unprofitable if you're realizing 40, but you'll see 15 easy if all of these are issues, right? I don't
Okay.
think I've gone into any customers where every single one of them was an issue. But
Well,
yeah,
that's good. That's
yeah.
very good.
So
Well,
you want to make sure to really look at them and take care of it and really in your next meeting with your CFO, ask if your team understands profitability across different service lines. Has the current tax and compensation structure been reviewed? And are we identifying opportunities for financial recovery in our current streams? And if the answer is no, make it a rock and get them done each quarter. Make more money. Make more money, guys.
it's all about making more money today, guys. So, Brandy, that was incredible. Does anyone have any questions? I know we said let's make this interactive. There have not there have not really been any questions in the chat.
No.
Um, so I want to make sure that we answer everything we possibly can for you, as long as it takes 1 or 2 minutes.
Yeah. And
And
you can always reach out. I'm happy to answer any questions directly that as it pertains to your business. Feel free to reach out to me. My email's there. Happy to answer anything.
I just want to clarify, it's March 19th. Brandy is
It
not
is.
able to help you with your taxes.
I am not able to help with taxes. I am not a CPA. I'm not a
Yeah.
tax girl.
Were you ever?
No, always on the managerial side, technology and CFO.
Okay.
I went
Very
the
cool.
MBA route. The MBA route, Steve.
I tried going the NBA route, but it didn't. Apparently, you have to be like good at basketball. Oh, stupid.
Yeah, it didn't
But
work out for you.
yeah. Matt, so happy that you enjoyed this. Everyone, seriously, thank you so much for hopping on here. I hope you all were able to learn something and get something out of this. Please, if anyone here wants to talk about, strategies for making more money with their business, don't
Yeah,
hesitate to reach out to either of us because,
yeah,
crazy as it sounds, alternative payments will do that for you, and so will Next Level Now. You
yeah.
take care,
And we do
everybody.
recommend alternative payments. They're one of our preferred providers.
Preferred providers.
Providers. Yep.
Yes. All right.
Awesome.
Take care, everybody.
All right.
Thanks,
Thank
Brandy.
you. Bye bye.